Welcome to Purchase to Profits. I'm Seth Ferguson. Our guest today is a successful business owner and an experienced real estate investor active in the multifamily apartment space, self-storage, and resort community development with real estate holdings in several states and several countries. He and his investors own well over $100 million worth of real estate acquired since 2010, and he currently owns about 3,000 multifamily apartments in his portfolio. Dave Zook is a published author and a popular guest speaker who has shared his real estate knowledge and experience at numerous real estate conferences and podcasts. Dave, welcome to Purchase to Profits. It's great to have you on the show.
Seth, thanks for having me.
You are very welcome. I'm really looking forward to this conversation. You've got a lot of stuff on the go, and I think we'll have a good chat.
I'm looking forward to it.
All right, so let's get started in your real estate goals. What is your real estate investing goal right now?
So coming out of 2009, 10, and coming out of that era, it was just, we were in the accumulation phase, and it was, saw an opportunity and took advantage of the opportunity. My goal overall as a wealth building strategy has just been to, accumulate, long-term buy and hold. We will sell some. 2019, I believe we'll be taking some profits, but overall, that doesn't divert us off course of, collecting assets, collecting bigger assets, collecting better assets, collecting, assets that will cash flow and continue to build wealth.
Yeah. So when you're taking a look at your portfolio, do you have, let's say, you're looking ahead for the next year. Do you say, I want to acquire X amount of units, or do you say, I want to own so much dollar value worth of real estate at a certain point? How do you really structure that to plan?
I really, I don't put those things on paper for myself as far as, amount of doors. I really, I look more at relationships. Who can I create a relationship with? Who, the relationships that we have, the vendors, the partners, the investors. To me, it's more exciting to look back over the year and say, oh, wow, I got to know 50 more people and I've got 50 more investors in my database, and go back and say, oh, hey, we got 1,000 more doors. We've got some great relationships, and I love some of the things that have come out of those relationships. And so that's the more exciting part to me, is how many people can I reach? How much of an impact can I have? And I believe if that's done right, it will equate into more doors, more assets, more, cash producing assets. But I don't really start out the year. I didn't start out this year. I believe, next year, this time, we may have fewer multifamily apartments in our portfolio than we have right now.
Yeah. And you mentioned you're in that transition phase because you started off in your accumulation. At what point did you decide to make that shift in gears? Was there something that did you have a rough idea of, after so many years I want to be able to change to solidify, or how did you make that determination?
As far as the accumulation phase, it's that had more to do with the market. I don't know if we're at the top. I don't know. It could keep going for another couple years. I don't know that.
Yeah.
But there's a point in time. I just don't like to pay a premium for assets that I collect or buy. I just, to me, it's more fun buying stuff on sale. And so when I look at that, and when I think about, what we need to do to really make an impact, when you look back and think about some of the assets that you could buy back in 9, 10, 11, and 12, and now what you got to pay for those assets or for similar assets today, it's like, wow, that was some real opportunity back then. And I wish I'd have bought more. Can we keep buying stuff that makes sense? Is there still opportunity in the multifamily space? Of course. But a lot of the low-hanging fruit, the really low-hanging fruit, is gone.
Yeah. And it's funny because almost everybody wishes they bought more real estate.
Oh my
you
goodness,
know,
yes.
yeah. Yeah. Uh, so, well, if we all had a crystal ball, we would all be much wealthier than we are today.
Yes. I mean,
So,
it's easy to see, it's easy to see the opportunities, when you look back in the mirror for, 5 years, 10 years and see what happened. But it's it's sometimes hard to see them when they're right in front of you at the time.
yeah, for sure. So, as you went along building your portfolio and your business, what are some of the things you thought would work, but turned out they didn't work? Do you have anything that stands out?
Normally, so for me, most of the time when things hadn't worked out, when I look back, it had more to do with the partners that I was doing business with.
Yeah,
So I've learned a lot about that over the years. When we go into an asset class, and I'm involved in several, heavily involved in several. But when we go, looking at an asset class, when I get introduced to an asset class, I'm much more um, interested in the team, in the people that I'm going to be doing business with, than I am about the actual asset. Sure, there's things that I want that asset to deliver to me, tax benefits and cash flow and wealth appreciation and all that stuff. And if the asset will provide that for me, great. But that's secondary to the team. I'm looking at the team first.
yeah. So, can you share maybe with us how you used to vet potential partners and how you've changed that to how you do it now to make sure you're working with some good people?
Yeah, I mean, I'm a pretty positive guy. I I think naturally, I think there's gold under every rock, and it just I'd look at a deal and get all excited about the deal. Well, that's mistake number one. You got to look at the fundamentals and keep your emotions out of the deal. But no, anymore, it's, I want to talk to people who've, if you're coming to me with a deal, I want to talk to people who've done business with you. I want to see your track record. What have you done in the last 5 years, 10 years? So those are the questions that I'm asking. And those are the things I'm looking for. If you're looking to start out and you're hoping to hit it big and it's the only, the only, the only real thing that you've done in the last 5 or 10 years, most likely you're not going to get my attention. But if you've been really super successful and you're out there, just making waves and getting it done, and people are saying really good things about you, that certainly goes a long way.
Yeah. How much does your gut instinct factor into that? Are you a gut kind of guy?
Um, Somewhat, but it still comes down to, I mean, you still got to do the research. I mean, yeah, I can, I mean, even if you're a really super successful guy, but I can tell that our personalities aren't going to be a great fit, and you're not going to be a lot of fun to do business with. And I mean, you know what? There's enough of people out there that you can have fun with and do really well with. That if it's not a good fit, even relationship wise, and if we can't have fun doing it, why do it?
Yeah.
Life's too short to do business with people that you can't enjoy yourself and can't have fun with.
Yeah, no, for sure. So, do you have any, as you're growing your business now, do you have any daily or weekly or monthly rituals that you do to keep, what you want to accomplish top of mind?
I mean, I've got a number of rituals, and some of them have to do with health and fitness and spiritual and business, wealth building. Um, Typically, when we get into an asset class, it's a lot of work up front. It's a lot of trying to figure out how we work together. You got to put systems in place. You got to do all that stuff. But after that's set up and you do several successful deals together and you sort of systemize it and put the right people in the right place, you know, it's a whole lot easier after you do, a couple deals with the same parties. Um, and I'm not necessarily going out looking for new parties to do business with. I've got, several teams and, and we really like how we do business and really like how we work. So, but no, I would say typically the hardest part is up front. That's, get that first deal under your belt and kind of feel each other out and see how see how we work together, and then just chart the course from there.
Yeah. And you've mentioned you're involved in a couple different asset classes. When you're entering a totally new class where you don't have a track record in there, how do you how do you approach that entering that new space? Because you had mentioned before that if somebody doesn't have that track record of success, they might not catch your attention. How do you make sure that you're going to catch somebody's attention moving into that new space?
Typically, those opportunities are coming to me at this point. I'm not necessarily going out and looking for them. Um, I mean, the first two things that I'll look at is, tax is very important to me. I got chased into the real estate space because I had a tax problem. And so when I look at going into any investment asset class, I'm looking, okay, does this serve me well from a tax perspective? Because at the end of the year, coming down to the last quarter of the end of the year, I'm placing capital. I'm looking, okay, how can I keep myself in a tax-free zone? So, tax is a big one. Cash flow is another one. Appreciation, kind of down that line. But again, that's still secondary to the team and the people I want to do business with.
Yeah, no, I totally agree. People always come first, for sure. So do you have a deal that really stands out, that really rocketed you forward in terms of achieving what you want to achieve, or taught you some really good lessons?
Yeah, so that's two different questions. So the ones that taught me the real lessons usually weren't the ones that worked out really well.
Well, let's do one of those.
All right, so yeah, my very first big multifamily deal, I got in with a new partner. It was first time deal for me, and I got emotional about the deal. I thought it was the best thing ever. The guy was a good sales guy, and I ended up losing $500,000.
That'll do it.
It's not a lot of fun for your first deal. Looking back, there was a number of mistakes that I made in that one, and I recognized them, and luckily I didn't just hang it up and go home, but I tried it again with another team, and that team we've done really well, and we went out and acquired 3,000 apartment units, approximately 3,000 apartment units, and it was just the difference, after you do business with good people for a while, the not so good people kind of become a lot more obvious because you know what it's supposed to feel like. And so lack of experience on my part, that was a big one. But no, it was a painful lesson. I learned more from the ones that hurt than the ones that did really well for me. And, luckily back then it was all my money. I wasn't a syndicator back then. I was a syndicatee. I was the only investor in that deal. And, so that was another mistake. There was a bunch of mistakes that I made on that first deal, but I learned a lot, and luckily I hung in there and turned it around, and we did really well since then.
Yeah, no, that's good to hear. And then that second deal that came to mind, which one's that one?
There's a number of them. One is, my team down in Memphis. We own a lot of multifamily deals in Memphis, and my partner has said quite a few times. You probably heard this phrase already. You make your money when you buy. So being able to come in as a buyer, sometimes with cash, and to be able to close quickly, sometimes within 30 days, show up really attractive as the buyer, with a strong track record of history of being able to get the deals done. I mean, we can go into a seller and say, hey, we closed on 25 of our last deals that we put under contract. Do you think a seller pays attention to that? Of course he does. So being able to show up as a strong buyer and just coming in and buying multifamily deals at a discount, sometimes 5, 8, 10% discount on $3 to $5 million deal, just because I'm talking, when we're showing up at best and final with 3, 4, 5 other buyers, and you're getting a big discount because of they're looking at your track record, and they want to see you close the deal. Sellers who pick the wrong buyers can be an expensive transaction.
Mm-hmm. And usually that leads to a late night phone call begging the second runner up to come back.
Yeah, and it's not always guaranteed. Often it's not guaranteed. Well, most often it's not guaranteed that the second buyer is still a buyer.
Yep. No, for sure. And you've mentioned your team. What sort of challenges have you had in building that successful team that's allowed you to scale up your operation?
All kinds of challenges at first, but I mean, it's gotten easier. I mean, if you know people, if several investors of yours in your network, and they come talking to you about this team, and you keep hearing his name several times, and everybody's happy with the deals that they've done with him, and then you dig down further, and you find out that these really are good people, really good people. That speaks loudly. I mean, there's background checks, and there's all the other normal kind of stuff that needs to be done. But when you start from that premise, you're really, you're not making that cold call. You're not going out and making the cold call. Those people, if you hang out with the right people, those people eventually surface, and you just then you got to figure out a way how you can go in there and add value and partner up with them.
Yeah. So do you have a method of determining whether somebody's good or not? Like, do you have a mental checklist that you run through?
Yeah, several. And like I mentioned before, not only do you, I mean, I know some people that are really good at what they do, but I wouldn't want to work with them. And, it could be a relationship thing. It could be a personality clash. It could be, a number of things. So, just because somebody's competent doesn't mean that you definitely want to work with them. You still got to make sure that it's a good fit. You still got to make sure that you enjoy working with them. And, because, I don't care how much money is involved, how much profit's involved. If it's miserable doing business with somebody, I'd rather do business with somebody who I enjoy doing business with and have fun with. So, yeah, I mean, there's a number of things that I look for. Probably though the biggest thing is when you cut out the fact that your partner is competent and he's not evil, you're probably getting rid of more than 50% of the risk.
Yeah.
So then you gotta once you're dealing with the right people, then you gotta go let them help you find a great deal and do what they do.
For sure, and you've obviously built a really solid team around you, based on what you're doing right now in real estate. So, how has getting involved in the investing side with real estate changed your life and your position?
Well, I mean, obviously, it came with a lot of financial benefits. However, I was doing really well before I started investing in real estate. In fact, like I shared earlier, the reason that I got involved in real estate investment to start with was because my other businesses were doing so well, and I was paying around a $500,000 a year in tax, and so when I sort of got chased into this space, it wasn't like I was really getting into this space. Yeah, we all want to build wealth, and we all want to increase our cash flow, and you want to do those things. But I was financially free at that point anyway. So I wouldn't say it. I mean, it certainly didn't change my standard of living, and I really don't think that if I had another $50 million, that it would change my standard of living. I'm living the life that I want to live as far as from a financial perspective. Yeah, there's challenges, there's fitness challenges, there's relationship challenges. Sometimes when you get so wrapped up in your business and your investing things, you kind of forget about some of the things that are even more important, like your relationships and that kind of stuff, as far as with your family and your children, and that takes effort. So those kind of challenges has, as things get busier, as as you get wrapped up in this stuff, I have to make a mental note to be aware of those things as well.
Yeah. So what kind of things do you do to make sure you're keeping those important things in your life, top of mind, so the business doesn't take over? Do you have anything you're actively doing?
You got to make notes. You got to be intentional. Those things don't just happen. You don't just go out and acquire a big multifamily building by accident. Same thing with relationships. You don't just fall into a relationship and have a dream relationship. Those things, you got to be intentional, and it's my personality that's not always natural for me, but you got to be intentional. You got to make notes and really be focused on what you want. If you want a really good relationship, you got to go after it. And there's some of the things that have not come as easy to me as, say, business or investing.
Yeah. Yeah. And I don't think anybody's that complete package where they're strong with everything, right? So you always have to be cognizant of your weaknesses.
If you meet that guy, make sure you have him on your radio show, because I want to listen.
Oh, for sure. Yeah. Yeah. I'll be making tons of notes on that call, but I don't think I'll be finding him anytime soon. So that's great. So where can people find you if they want to learn more?
So you can go to our website, therealassetinvestor.com, or if you have any questions on anything that we're doing, we're actually involved in several different asset classes, including ATM machines, multifamily apartments, self-storage. We even got an energy investment going on where we're taking coal and turning it into liquids and selling the liquids. So one of the things I would like to offer to your listeners, if they email info@therealassetinvestor.com, I will send them a little book that I wrote up. It's 8 lessons for syndicators and their investors. So if any one of your listeners wants to reach out, I'll make sure they get a copy of that little write-up.
Perfect. I'll make sure we put all the links there so people can get that pretty easily. That's great. So I just want to say thank you so much for doing this. It was really good to learn about how people are the cornerstone of building your team.
Yeah, well, thanks for having me on your show. It was fun.
Perfect. Well, I hope to do this again sometime. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.